I'm right here.
No,
I'm right here. I just take notes. I'm trying to take notes.
All right. All right, cool. All right, so we're gonna go over the two strategies how you can approach the market, right? So like I said, the first one, cut losses quickly. The one I like to move, quickly identify when you're wrong. So we're using this example. So to recap from the start, the trend is your friend. We want to trade in the direction of the trend. In this case, Apple is in an uptrend right now, right? So we're making higher high, higher low, higher high, higher low, higher high, higher low. So tomorrow you're looking for a trade tomorrow. So you want to take a trade tomorrow? Okay. I like to use my fib to measure where we're going to retrace to. So we're going to pull it from the swing low, swing high, right? I could take a sell trade, as mentioned earlier, if we break out of this, consolidation range, right? But I don't want to do that because it's a much shorter range. So since the trend is your friend, we want to trade the direction of your trend. You want to see where we find the support in an uptrend. So since this is the impulse, you want to see where we find the support. So let's say we're retracing. These are red candles. These are red candles. Let's say we hold these are red candles. Let's say we hold the 61.8 again. So now this is the entry. If you guys are going to choose this strategy where I teach you guys where you enter from the 61.8 on an uptrend, there's two ways to do that entry. Two ways, right? The first way is to set a limit order at the 61.8 for a buy, knowing that, okay, if it comes there, you want to be in the position. If it doesn't, you don't, right? If you set a limit order to buy right here, it's going to fill whether the candle closed or not. So that's a more aggressive entry and a very profitable entry as well. For that approach, you need to set a stop loss that's equal to the amount that you're willing to lose. So let's say this level, 173.40. If the price goes there, you lose 50 bucks, and that's what you're willing to lose. Okay, that will be your stop loss area, right? So the first entry allows you to have a stop loss. That strategy, like I said, 50-50, because we're still catching a falling knife. The market can keep dropping, so we're catching a falling knife. So that's 50-50, right? But if you win 5 trades that give you 200, and you lose 5 trades that make you lose 100 per trade, minus 500 from 1,000, your overall profit for the week is 500, right? So that's one entry. Second entry, you don't have to use limit order, right? Wait for the support to form. Wait for a green candle to close. This is my perfect type of entry that I've been doing lately. I used to just jump in at 61, it works, but once the support forms, it's just what's easier for you. Once the support forms, I say, okay, buyer stepped in. Let me see what the next candle does. Once the next candle starts to open and break past, I'm in, right? And as the candles develop, this is what I can do. Either two things. Either I can wait till we reject, first way to exit. This is the second way to exit, right? So you guys can watch this over. Flip your fib from the swing high, swing low, and then get out when we hit the 61.8. So just say, okay, I'm in the trade. This is my stop loss. So I'm in the trade right now. My stop loss is this, blue line, right? My stop loss is that blue line. Let me delete. Let me just switch I don't want to confuse my lines. Let me get it back. Stop loss is this blue line. How to make it? Let me see how to make it a little bit bigger. See. Stop loss is that blue line. Let me say it again. All right. So I know as long as we don't touch here, I'm still right. That's what the stop loss is there for. So I'm going to let the trade play out. So this is the robotic trading strategy that they want us to use from the books. If you get stopped out at 173, you lose $100. But if you flip your fib and let your trade run to the 61.8, you will make $200 to $250. And that's an automatic trade with no emotion because you have the plan written out. So I can write down that first strategy, but since I'm teaching and recording it, I'm not going to write what I'm teaching. I'm just going to go over it, right? So that's one trade strategy. So boom, you made 200 from that. All right, let's do it over. Second scenario, same thing. That was your entry strategy. This is your exit. Swing high, swing low. We closed at the support right here at the 61.8 fib level. The next candle opens and breaks above and you're in. Then we flip all of a sudden. Powell just said something crazy. Before we get to your stop loss, you can exit. You don't have to wait till we get the stop loss. The chances are we're going to come all the way to 172. You get what I'm saying? So once we close below your entry candle, just say, whoop, I'm wrong. I'm out this trade. Let me reevaluate and come again. But guess what? That doesn't mean your bias is wrong, guys. Your bias is not necessarily wrong. You can still wait. You can, let's say our next candle opens green and engulf this one. You can still wait. And then if you see that happen again, you can say, okay, let me reattempt this trade. Put my stop loss right here again and enter the buy and ride it up, right? So there's multiple scenarios, but you want to admit when you're wrong fast, right away. The books are recommending we be robotic. Like we put no emotion into this. We be completely systematic. So in every trading strategy, since I'm writing it down, you need to have the time frame, right? The time frame. Number one, what time frame are you going to trade on, right? The second thing, times are time of the day. Of day. I got to write this a little better, so because I'm going to send the picture to the group, right? So when you have the time of day and the time frame, the third thing you need to have, asset traded. Asset trading currently, right? So when you have the asset that you're trading currently, the entry confirmation and exit confirmation is going to come next, right? So first, next thing you want in the strategy is your outcome. Outcome, like your goals. Let's say goals, right? Then after that, entry confirmations. Entry confirmations. You need at least 3 for a high probability trade. 1, 2, 3. Exit confirmation. One, 2, 3. It could be any amount. So this is just what you need in a nutshell, right? This is the strategy now. Swing low, swing high. We formed the resistance. Now we're waiting for the support. Wherever we form a support, you look for a buy, right? So let's say we hold a support at 38%, right? We don't have to go to the 61 all the time. Let's say we go to 38%. A green candle can close right here. But how are you going to know if you're going to take the trade? If we close the green candle at the 38% for a buy in a continuation trade, it's a strong chance. It's a good chance, I mean the trend is really strong, and it's a strong chance we can still continue lower. So there's 2 things to consider, right? So you just got to be able to identify. If we hold the support, next one open and break past, boom, you take the buy. Simple. If we open and you buy and it breaks and start breaking and then start flipping, you get out, because that means we're going to go down to at least a 61 and you just wait. But the ideal scenario, I'm just trying to break the rules to tell you can take the trade in a support form. The ideal scenario is you want everything to come right to the 61.8. That's the ideal setup. So your first entry confirmation for your non-breakable rules trade, if you want to consistently win in the market, I'm giving you one right now. Cut out all the chatter. I'm sorry for the guys that was watching recorded, because this is going to be recorded, but we got back to it. First entry confirmation is, what is the trend? Direction of the trend. So you want to identify the trend. Example. So this is an uptrend, for example, right? I'm going to do an example of the uptrend and downtrend just to send it to you guys. So if the trend is an uptrend, right? Uptrend. That's one thing you got a confirmation. What is your entry confirmation? You want a support to form in an uptrend. So just to confirm, we're on extreme fear. So that wouldn't be some, that, you see that? is a good question. That's a good question. We're on extreme fear, but I'm just showing the guys the strategy. You know what I'm saying? Remember, the strategy is the 80% hit ratio. Even if it's on extreme fear, you still have to take it if you're going to be robotic. So this strategy is for the robotic way to be successful. Meaning like, don't think. Just use what's on the paper. You know what I'm saying? So trend, let's say it's an uptrend. The first thing you want to do, find an uptrend is we need to hold a support, right? We need to hold a support to enter a buy in an uptrend. What support is the best support to hold? The 61, I'm going to put 50% because the often repeat the 50%, 61.8% fib level. Support. Yeah, I started drawing up too much stuff on this support. I hope you guys can see the small writings. Support, right? Another one I'm going to add is RSI over sold. Right? But the main thing with this strategy is the support, mainly than the RSI and everything, right? So now you know it's an uptrend. The price comes now to the 50% and the 61.8 sweet spot. Now you're looking for an entry. The RSI is oversold. The next thing you want is a green candle close. Green candle close and support. Once the green candle close, you pull the trigger with follow through candle. Pull trigger, follow through candle. Price at. So these are all the confirmations for the trade direction of the trend, right? That's the confirmations for an uptrend. So confirmations for a downtrend. So this is what you'd want. So let me show you what that would look like. Realistically, we just did an example. So this is what that would look like. Let's say we didn't see none of this before. Pull, swing low, swing high, bring it over. Ignore everything to this side. But look where we are now. That's what you want to see alone on the chart, this area. RSI oversold, green candle close at the 61.8 fib, and the other candle open follow through for a buy. And as you see right there, it's a great buy to continue up in the trade. That's the bullish trade setup example, right? So let me find a bearish example now to give you guys. It's the same thing, just vice versa. But I'm just going to find it because, we're recording a session. I want to make sure anybody that rewatches it catch some value. Everything that's been pushing lately. Barely any downtrends. Let's see what Tesla got over here. So here's an example. So this is a gap down open, right? So I'm going to go to the other one. All right. So we were consolidating at the top right here. Is everybody paying attention? Because this is the last round. Just making sure this part is good.
Yeah.
All right. So this is the consolidation part right here. You see that here I highlighted? If I zoom out to the daily, it's going to be 1 day candle because that's 1 day of consolidation. Right? Where is it? It's over here somewhere. So it's like a small dot. You can barely even see it. So that's 1 day of consolidation. So I know we want to break down at some point. So you can enter a bearish trade there from the top, that rejection, like you're saying right here. So we made a lower low, lower high. I know we want to reject because we're consolidating at a high. The RSI is overbought on the daily time frame, which is a very strong confirmation. And we're consolidating at a high. So the 1 day resistance is very strong. So I know we want to break down. So let's see what happens, right? So now we go over, we're waiting for the breakdown to happen. Boom. the breakdown happens. We missed the entry, right? We missed the entry of the breakdown. It happens. Because it's a gap down, right? The market opened with this gap down and we just kept going. How are you going to try to trade this is if you miss it, it's because now we're in an uptrend. So we're going to forward test it down. So we're in a downtrend, I mean. So lower low, lower high. All I'm doing is drawing my fib from this swing high to this swing low. And I want us to pull back to the 61.8. See? I want us to pull back to the 61.8 right here. And I want to get a red candle, close at support. Same thing, vice versa, to enter the sell or follow through. But as I showed you guys before, we don't always come back to the 61.8. We can reject it at 38% as well. But that's not the ideal strategy. I'm trying to give you the robotic one. But it's up to you if you want to be flexible. Matthew is flexible. Raheem is flexible. But if you want a strategy to be robotic with, this is what I'm writing down. I'm going to send a picture in the group as a reminder. So, yeah. So, we pull back to this, the 38. This is an easy entry. You can say, okay, we're going bearish. We're done making lower low, lower high, lower low. It's a bear flag right here. Once we reject the 38% fib, I'm a continuation trader. That's a bear flag to trade. So once that support breaks, it's a strong chance we're going to retest the low, which is 264, and it happened. So that's a trade I could have took, but that's not the strategy. That's not the idea. So now, let's say it didn't pull back to the 61.8, so you didn't take a trade. You're making it go, right? You're still using this, pull from this swing high to this swing low now, again, and see if we still pull back to the 61, right? So now, we pull back to the 61, right? And we broke above it. So this trade proved to be invalid. We didn't reject it. But guess what? We weren't really invalid because we just retested this level of resistance. So it's just keeping your eyes on the trade. We retested that level of resistance, 271, 271. And rejected it perfect. We rejected it as resistance perfect. So look, we broke out of here, we retested it perfect. So it's even a perfect sell, more perfect sell. Then look what happened. We rejected, and then this candle eventually closed below the 61.8. When it closed below the 61.8, look what happened. We dropped way down. Way down. You see that? All the way down. That's why I want you guys to enter the 61.8 as the ideal robotic strategy, because you get a long more time to hold the trade, more wiggle room. All you got to do is enter, put your stop loss. If you get stopped out a couple times, oh well, retry the trade again. You know, that's how if you want to be robotic. So let's look at another example. So that was a drop. So this drop, if we reject the 38% fib, that means the bear trend is really strong. So we're going to pull from this swing high to this swing low. Rejected 38% fib again. This is another bear flag trade. This is a bear flag. So how you take the bear flag? You take the sell when we close outside the flag. So as soon as you realize we rejected the 38% fib, as soon as this candle closed outside of the diagonal support, the market sentiments are extreme fear. It can take us down lower, right? So that's a bear flag trade. It's still not the ideal setup I'm trying to show you, but it still works once you guys understand the different levels of the fib. So the ideal setup, let me try to find another one. This sell trend is so strong. I can't find one in peace. All right. So this lower low, lower high, lower low right here. This is lower low. So we made a wick. If I pull it to the bottom of the wick, it's going to show that we came to just about the 61. But I'm going to pull it right here. Price action. So this is the more of an ideal setup look now. So we came up to the 50% to the 61.8 area, right? So the confirmations are, we're in a downtrend. Price is slowly trending up. The market sentiment's on extreme fear. I need to put that in there. Market sentiment. So the market sentiment is on extreme fear as well. So that's a given additional confirmation. So how you're going to enter is this. Okay, you pulled your fib from your high to your low, and you're looking for your sell in a downtrend. We came up to the 61. We made a rejection. Boom. The first candle closed bearish right here. This is the robotic strategy we're dealing with, right? So the first candle closed bearish. You see the fact that this candle has so much volume right here, this green candle, is going to be scary to try to take this sell, right? Because this green candle has so much volume. But let's say you take it anyway because you're following your strategy. You're not overthinking it. This next candle opens red, and you take the entry. You take the entry right here. Once you take the entry, this candle is going to come back. But if you're doing the strategy robotic, like I'm trying to discuss before, where there's no emotions involved, no feelings involved, this is how you execute that. I'm looking for the box for you guys. What the hell is that damn box? You see how they do when they want to charge people? Right here. So your stop loss will be above this rejection candle, right? So you wouldn't get stopped out unless we come all the way up there. But based on your entry, that's going to be about, it depends on your lot size. If you want to lose, if you're using Hugo's way like me, you can have like a 0.30. You'll probably lose like $60 if you go there. Nothing crazy. Can't, or 0.20. But if you set your stop loss right there, you say, okay, rejected. This is my entry, my stop. If we get here, I'm wrong. I'm getting out of the trade. That's good because look what this trade would have done. You would have won this whole profit right here. And you know what you do? After you win that profit, you will leave a runner. You would close some of your trade and leave a runner to take this whole thing down. You just put your stop loss and profit to run. So that's trading the direction of the trend. So those are all the confirmations, right? And the fear, the market sentiments was an extreme fear. So, all right, let me write it. So trend, I'm going to write it, bear trend. Trend, down trend. Downtrend. Downtrend. Price at 50%, 60% fib rejection. RSI doesn't have to be overbought, but it was overbought here, so it was a part of the ideal setup confirmation. RSI overbought. So above 70. So it's vice versa. The uptrend, you want to buy at the 50% fib level when the RSI is oversold and you get a green candle confirmation with follow through. And a downtrend, you want to buy when you want to sell when we reject. I'm right. Sell. Trade. Short. That's a lot of stuff I'm writing up here. Sorry about this. I'm gonna send it in the groups that I hope you guys can figure it out with it still. Sell trade. Example. Man, this so messed up. Buy trade example. So it's vice versa with the sell trade to have a robotic strategy. So I'm writing a red candle close, red candle close, follow through candle.
Which
right
candle
here?
would you? Yeah. Go to the right.
This one.
Yeah. Would that be the best entry,
that would be the most ideal candle to enter from. But you see this approach that I'm showing you guys right now. It's completely different from the one I showed you in the mornings. You guys know that, right?
Yeah.
Just to confirm. So you could trade the market either way. You could wait for the support resistance to break like I'm doing it, or you could trade it with the fib. I mix it all together. You see,
yeah,
but this would be the best kind of course because it engulfs the others. But if you're being robotic and systematic, you'd enter this candle and just trust your trade to play out. You know what I mean? And let it stop you out to be robotic. So I'm giving you guys a robotic strategy. So even if you want to fund a different account to try the robotic approach or something, just to see how it works, because the robotic approach can take a lot of stress out and make you win a lot more profit. Because you see the fact that I'm actually cutting out the trades early.
Yeah.
I'm missing out on a lot of profit. If I was more robotic, I was more robotic, I think I would have been getting some more trades.
I think I need to work on that as well.
Huh?
I think I would capitalize more if I stayed and, stay in the trades longer. But I see 60, 80 bucks, I clock out.
You're literally, because you're literally following the process. Literally.
Yeah.
So it's like,
So I got a question whenever you're done with that question.
Yeah. Just putting a few little things on here to make sure you guys have a few little example. There's more things that can go, but you know what I mean? Vice versa, bear trend. Bull trend, same thing. You just flip it for the bear trend. Exit confirmations, I'm gonna put that after you guys, after I get your question, Matt. I'll put the exit confirmation. All right, I guess it's not here.
No, I'm here. I just didn't hear you. I was in the elevator. I'm just walking back in the house. It sounded like I just couldn't hear you. So my question was, it's really just to confirm, like, today I saw some buys, but I'm just thinking, and I checked, it said extreme fear, not just fear, extreme. So then I'm sitting here like, yes, the trend is going up, but the market sentiment is on extreme fear. So I was just sitting there like, now I'm just conflicted. Do I take the buy and just be on the cut, like just be on the lookout because the bears can and more than likely will step in and just sweep all that out, or do I just trade it like normal, forget the sentiment?
I think so. While I was kind of writing while you're talking, it's a tricky question in that case, right? So rephrase the question and I'm gonna give you the best answer. Go again. Say again.
So it's really just
you see the market on extreme fear, and what happened? All right, go ahead.
And we're trending up on the 15-minute. I'm thinking taking a buy, but then it's on extreme fear.
What
so
type
I have
of
in the back of my mind.
Are you seeing it trending up with volume, or is it trending up without volume?
Like right, like if you're going, like on SPY, we were trending up
with volume.
No. I think it was.
If it wasn't with volume, and it's the market sentiment's fearful.
It's on SPY. You see, we're trending up like that. This.
What did you say?
Yeah, you see, we're kind of sort of trending upwards.
Like slowly, right here.
Yeah.
Yeah.
Do I just take the buy and just play with the buy, or do I and just keep in mind that probably the bears can step in at any time and just be ready to close? Or
I feel like I honestly think you're at the trading level of experience to do that. You know, I think you're at the level to trust yourself. But let me ask you this. Based on your experience with what you're saying, has that been working for you or hasn't it been? That's the question. You know what I mean?
Every time I go against like that sentiment, I jump in thinking I'm good. Boom. Oh, like if I'm taking the sell and we're in a greedy market, the bulls will buy it all back up, and I'm like, no, that's not what I wanted to see. Or vice versa. And like if we're in a bear market and it's extreme fear, and I see a buy opportunity, I take the buy. The bears, and it's just every time for me at least. Every time it happens.
So what you're saying? So every time you take a buy in a fearful sentiment, you lose the trade.
Correct. Yeah.
Exactly. So don't do it again.
Because I was sitting there today.
I'm gonna tell you why. Because I learned myself. I learned myself. That's why I look at the sentiment every morning. You haven't been coming to the morning watch this. I haven't seen you, but you got to keep in mind. I look at the sentiment every morning because it helps. Not saying you can't make money, but you got to be really quick with it. You get what I'm saying? That really quick. So what I'm saying that is, you can take a buy, but you can't lollygag. If it's going against you, get out immediately because the sentiment's greedy. You get what I'm saying?
I got you.
But you can still attempt it. As long as you don't lose a lot, you're in the game. That's the point. Is we don't have to be scared of losses, you know? As long as we don't lose a lot, we're in the game. Me, I'm trying to figure out how to capitalize on my wins a lot more. I haven't been letting a lot of runners run because the market's so choppy because of all this news. The economy got messed up because of the bubble in 2021. You know what I mean? So I'm waiting for everything is balancing out slowly. You see it, so things will be more trendy. But I have to do what works for you. You see, if we're in an uptrend, Matt. You see, if we're in a real uptrend, Matthew, you hear me?
Yeah, I'm here.
If we're in a real uptrend, the market sentiment is going to be on greed. Easily. If we're in a real uptrend. So if you look for a buy in an uptrend, it's going to work out. If we're in a real downtrend, the market sentiment is going to be on fear. Look, right now the market sentiment is on fear. We're in a real downtrend. You know what I mean? This is the S&P 500. We're trending down. You get what I'm saying? So it's like, when you're in a real downtrend, the trend is always your friend at the end of the day. Not saying you should limit yourself to not taking the trades, but you want to get it as precise as possible. So yeah. So yeah, that's pretty much it. And any more questions before I go? Because I'm gonna take a picture of this and send the group. I took a picture of the empty one to put in there for you guys to fill in your own stuff. And then I put a picture with my stuff in there.
I'm good.
All right.